Crypto's ultimate showdown, the 4-year cycle, loyalists, or the bold shift to new territory, the extended supercycle theory. Truth is, we're smack in the middle of uncharted waters right now with mixed signals from time and price and much more. So buckle up, it could give us a swing in either direction. Now, given the importance of this question, let's take a fresh look at this along with my latest data that we have. I'll try my best to remove my extended cycle bias and actually try to look in an honest way where we are and draw conclusions according to all the information, of course, we have in front of us right now. So let's start with our major cycle price action update. Last week, we did a video on the 50-week simple moving average, discussed why historically this has been such a major bull bear line in the sand for Bitcoin and to look for bounces from that level. TLDR here was that if Bitcoin touches this line and closes above it, we usually get either a solid bounce higher or a new all-time high. If Bitcoin closes below that line, it usually is the beginning of the next major bear market. So a retest there is pretty scary for the market. Well, this past Sunday, we got a close above this line, which again, historically indicates at a minimum that we should see a nice upwards bounce in price, if not a move to new all-time highs. So that's the cycle price prediction update. Here's why that close with the 50-week SMA was so interesting. You see, in terms of where we are within the calendar, the 4-year cycle, all that kind of stuff. So look, from the bottom of the 2015 bear market to the 2017 top, it took 1,064 days. Again, from the bottom of the 2018 bear market to the 2021 top, it shockingly also took 1,064 days. What the fuck? It's so crazy. Anyway, now if we extend that same 1,064 day measurement from the bottom of the 2021 bear market, it hits 2 weeks after our $126,000 all-time high. So the fairest conclusion we can draw here is that we are still in an indeterminate period for the 4-year versus extended cycle question. If we keep breaking down here, well, 4-year theorists are proven correct and it's all over for a long time. But we have defended the 50-week SMA. Price could continue to drop from here. Obviously, it's always possible. Some shit can happen. That would be consistent with the 4-year theory and basically confirm it. However, since we did get a close above the 50-week SMA on Sunday, then historically, that's a counter narrative. That is an indicator that prices are likely to rise in the near-term future. But here's the deal. If we make a new all-time high at this point within the calendar, then perhaps that counts as a break from the 1,064 day, or let's really just say the 4-year cycle. Definitely counts as a break of the 1,064 day bear bottom to top pattern that we've seen in the last 2 cycles. It's a very, very small data set, by the way. Meaning a new all-time high from here will be an indication that perhaps we're moving towards the extended cycle. Now, we could still have a peak in November or December, and it would still largely fit in with the 4-year cycle just with some new data. Okay, we can't be so rigid about it. But if we have a new high in Q1 of 2026, I would say the 4-year cycle's over. Now, the next few weeks of price action are very important, and they're going to give us a lot of information about where things are going. Now let's turn to the Bitcoin's correlation with the business cycles. So we're all familiar with the Bitcoin cycles in terms of halvings, but at some point, people start to look for different narratives. People think this is actually a bit of a mirage, and that the real correlation, the real driver of Bitcoin are essentially the larger business cycles, which is something we've been talking about for a long time here. Now, before we get into that, guys, you're not going to believe this insane promotion coming out from Femex right now. I've used this exchange literally for years. They just launched one of the most generous cashback deals I've ever seen in crypto. Put in $5K, you get $500 back. Deposit $10,000, you get $1,000 back. Put in $20,000, $1,600 cash back bonuses, plus up to $20,000 in trading bonuses. Essentially, the more you trade, the more money they're stuffing back in your pockets. It's secure. They got the deep liquidity. They got the coins you want to trade. Global access, meaning anyone, anywhere can use it. A VPN may be needed in some cases. This is real money on the table, okay? So don't sleep on it. Click the link down below before this deal disappears. Go check it out. Look, guys, we need to talk here about the business cycle. We need to talk about the US ISM Purchasing Managers Index, or PMI. This chart basically tracks the US business cycle. Now, here's how to read this chart. When the PMI is above 50, it means the economy is expanding. It's getting stronger. When it's below 50, the economy is contracting. It's getting weaker. Very simple. Therefore, these swings in the PMI are very important. These are the business cycles. When it's below 50, we're not in a business cycle upswing. When it's above 50, we start expansion. We start heading towards the end of the business cycle. Periods of economic expansion and contraction are totally normal in a business cycle. That's how the cycle works. Now, here's something really interesting. This is Bitcoin's price history overlaid against the US PMI, okay? Bitcoin is in orange here on the logarithmic, so we can see everything. And look at the correlation. Bitcoin's 2013 top coincided with a PMI business cycle top. The 2015 bottom was close to the PMI bottom. They topped together in 2017. Now we're off the logarithmic chart here, but more bottoming together in 2019 and in 2020, and another top together in 2021. We are extremely correlated to the business cycle. And the business cycle, of course, has many factors that come into it. Loose and tight financial policies, monetary policies, all are a factor here. But this is a very pure way to look at the economy and risk-taking or lack thereof in the market. Of course, we also found another bottom together in 2022 and 2023. So again, a very compelling correlation. However, when we take a look at our current bull market, that's when we realize the complexity of what we're dealing with here. So notice that since October of 2022, the PMI has spent the vast majority of its time under the 50 mark, meaning there has been no major expansionary period for the US business cycle when it comes to manufacturing. There hasn't been any big boom since late 2022. And yet, Bitcoin proceeded with its normal 4-year cycle bull market, kind of, sort of anyways, but altcoins have been basically slaughtered most of the time with a few exceptions, a few monthly runners. So what this tells me with regards to a big picture correlation is that there probably isn't a one-size-fits-all explanation for Bitcoin cycle movements, but I do think that the ISM PMI, the business cycle, is an incredibly important factor here. But it's a combination of factors. The halvings, the business cycle, global M2 fluctuation, interest rates, adoption metrics, et cetera, et cetera, et cetera. It's definitely a mix of things. But since the halvings are exponentially decaying, then we know that this halving factor is getting less and less relevant from one cycle to the next. So I think it's important that we take a step back and acknowledge all of this, because one of the best cases for the extended cycle is that we have not had a business cycle expansion yet. When the ISM PMI breaks out of a 50 and goes up to 60, 65, that's when things get toppy. The main question I have at this point is what happens to Bitcoin's price if we start a new PMI business cycle? Now, I shouldn't say if we start, when we start the new PMI business cycle expansion, which will come. It'll probably last about a year to a year and a half when it starts happening. The extended cycle guys will argue that it will be yet another tailwind to help Bitcoin break the 4-year cycle. Well, the 4-year cycle guys will say, since Bitcoin is able to hit 126K without any help from the PMI, then there's no reason to think that a rising PMI will help keep Bitcoin elevated. The answer is not clear at this point. Everything's only clear in hindsight. Right now, we have our crystal ball and we're trying to speculate, right? Anyway, that's where we're at with everything right now. I don't think the Bitcoin tops until we see US manufacturing numbers around 60, 65, and we're under 50. We have major expansion coming, but the next few weeks are still pretty important for Bitcoin. And if we get a new all-time high from here, then I think that will be really giving the 4-year cycle guys a lot of doubt about the viability of their thesis, because the key times have all passed at that point. But we'll have to see when that happens. And then there's the looming question of what a new expansion in the business cycle might mean for Bitcoin, how it's going to look, and how long that expansion in the business cycle lasts for. With such a delayed business cycle, the longest delay ever in history, in fact, since recorded history, then does it mean we're going to have a longer business cycle than usual? We can't draw any firm conclusions on things that could happen 6 or 12 months down the line. But I think the most important thing to say here is that with the business cycle being the way it is right now, and considering the strong historical correlations to it, what we've essentially seen with Bitcoin recently is the Bitcoin IPO moment with the ETFs. Institutional buyers have been slowly piling in, but there has not been a major expansionary force in the cryptocurrency markets. That will come when the US PMI breaks out beyond 50 and starts a major expansionary phase on the road up to 60, 65, where it usually tops. In that situation, we may have another year of bull market, another year and a half of bull market, if those historical correlations hold. And of course, past performance is not equated to future performance, but gosh darn, it's worth paying attention to. Thanks for watching.